I think all human beings are built off some sort of consistency in their life, in their financial life. That's why we have monthly bank account statements, monthly credit card statement. Everything's on a monthly and an annual year because we need some sort of pattern of consistency to base our decisions off, to base our spending off of, savings, etc.
Welcome back to the Retire While You Work podcast. I'm Myles Zuger, wealth advisor here at Raymond James and Adams Wealth Partners, joined by Carson Odom, another wealth advisor here on the team at Adams Wealth Partners. You may have noticed we took a week off on the podcast here. Carson, I think you were doing a little traveling. What'd you have going on?
Little beach trip with the family, annual beach trip. Got a little tan. Wore the white shirt to help make the tan pop a little bit today.
I like it. And I was in New York with David for a Raymond James Chairman's Council retreat, just learning from other top advisors, getting ideas and networking. I think it was a good trip. Always good to get up to New York for a couple of days, but I always like getting back to Nashville, where it's a little bit slower pace also.
A little bit more humid, right?
A little bit more humid. It was pretty warm up there. I feel like the all that concrete gets pretty hot when the sun's shining on it.
Ain't nothing like Tennessee humidity, though.
That is true. That is definitely true. Excited about our topic here today. We're going to talk about planning for freelancers, gig workers, but really anybody. I'll say this really applies to anybody who has a 1099 income, works on commissions, and does not have a stable W-2 paycheck coming in each week. I think being on pay like that can have its challenges, certainly, with, you don't necessarily know when your next check's coming in or how busy you're going to be. But I think it also has its advantages, especially when it comes to maybe tax planning, which we maybe get a little bit into today, and financial planning, as well as the freedom that you can have. I guess that can be a good or a bad thing also if you're not somebody who can stay on task, but the freedom that you can have from being a gig worker, a freelancer as well, and what that can afford you.
Yeah, I think one of the biggest challenges is inconsistent income. Even if you make a lot of money, even if you're a freelancer making $500,000 a year, making a large stream of income, it can still be difficult to plan around that large stream of income, because what if 250 grand of that 500,000 comes in 1 month out of the year? And then you've got to factor in quarterly estimated tax payments as a part of that. Maybe you want to max out a retirement account. The list goes on. How do you make that income stretch to, some degree? So that's a big challenge, is managing cash flow throughout the whole year. And we can get into this, but also you don't have employer sponsored benefits, whether that's a retirement plan, health insurance, so on and so forth. So it's kind of on your own. It can be viewed as a con, but it also opens you up to some added benefit for being a freelancer. So like you said, that's kind of the landscape. There's definitely some pros and cons. And I think most people who are freelancers would say there's more pros to cons, having your own business or having your own control over your income. As it goes with any person that has a small business and really any financial plan, a lot of the foundations are the same. A business needs cash set aside, kind of like an emergency fund. Your personal account, you still need an emergency fund, just like anybody else. Bucket one, emergency fund, typically you might hear 3 to 6 months worth of expenses. If you're self-employed, make it 6 to 12, hit the 12-month target as cash in the bank, because cash flow can be really inconsistent. 12 months of living expenses in the bank for inconsistent income, absolutely necessary, in my opinion. I don't know what you think.
Yeah, I mean, I would agree with you, especially on the emergency fund point you had here, or just running a business. I think even if you're just a one man or one woman, one person business doing it all by yourself, I think it's so important to treat it like it's a true business. Have a set of books for the business, have a set of books for personal. Not only does it make things so much easier on you come tax time and just for general planning, but your CPA is going to love you if you're doing that and you're not having to comb through a stack of books that you've been running your personal life out of and your business life out of and trying to figure out what's what. And obviously there's some gray area there. You might, as a business owner, try and take a few more write-offs if you can, but in general, having two sets of books just makes life so much easier for not only you, but any professional people that you're working with as well. CPAs, financial advisors, attorneys, etc.
Absolutely. Keep it separate. It makes life so much easier. And I think what was interesting about our careers and how we've grown is, David, our owner and founder, started this business over 20 years ago. For the longest time, it was him, or maybe him and another employee, or something like that. So, if there were personal expenses intertwined in the business, it didn't really matter all that much because it's still just him. But as we've grown, it's become more important for us to understand how is the business actually performing, not after all X, Y, and Z personal expenses that are lumped in into the income statement. It helps you identify more clear picture of how is my business performing? What are my business expenses? What does it take for me to live personally? And I truly think one of the best things you can do is draw a hard line between business and personal, even if you don't have any employees on the business side, even if it's just you, still absolutely draw that line because you're only going to benefit from it.
Yep.
Now, there may be some personal expenses like mileage or some gas that you could actually write off for the business. That's okay. Or some, a home office or different things like that you might be able to write off. Again, that's fine. But again, draw a straight line. Try to keep it separate.
Yep. What is one of the, maybe just like for anybody from a cash flow perspective, what's just like the biggest tip you would give somebody? Maybe is it, I think I would always say, I think it's good to have an emergency fund, a good healthy emergency fund when somebody's self-employed, especially, if somebody's married and they both have W-2 jobs, you can maybe go as low as 3 months of an emergency fund. When somebody's self-employed, I think it's almost more important to have 6 to 12 months
Yeah.
of expenses built up in the emergency fund. Just because, I mean, we saw the worst of the worst with COVID in 2020 when, some people weren't really out. I mean, they're out of work for 12 months, some for 18 months with very limited income. And so having that padding there made them feel so much better. And it just gave them the chance to, take a pause and figure, okay, what are we going to do? How can we make money? How can we maybe pivot and keep the business we had, but start doing it in some other arena and become successful there? I think having that money so that you're not panicking cash flow is down a little bit. Then you're seeing it this year, I think, in the real estate area as well. I mean, it's no surprise that interest rates are up, housing market has slowed. So you're seeing realtors that have maybe only sold a couple houses this year. And so you're seeing that income come in waves. I mean, they could be $1 million homes where the commissions are great on those, but it's still very inconsistent income to where if you sold one in February, now it's July and you just had your second sale, having that cash flow planning and that emergency fund to be able to get you through those several months, I think is so key and important. What would you add to that, or what would you view as maybe another tip for cash flow
Along with
planning?
that, or a little bit deeper with your cash flow, yes, with an emergency fund, give yourself, I'm making numbers up here, 10 grand a month that goes from your business account, drop it into your personal account. That is your paycheck every single month, and live off of that. So a few things happen. One, you're learning to live off a set amount and not just an unlimited amount of money. So you're forcing yourself to, okay, here's my 10 grand a month that I'm forced to live off of. I'm going to live off of it. And as cash builds up in your business, if you're, making far more than 10 grand a month in your business, have a quarterly true up. And then decide what you want to do with your extra cash flow. But that way, your monthly expenses on the personal side are already taken care of. You're not going into massive amounts of debt, or you're not just transferring all your business income and then you're just spending it and you still don't have anything left over. Have a set amount. As time goes on, if you're consistently spending more and your business is making substantially more, okay, transfer 15 a month on a monthly basis and live off of that. And then true up quarterly. Okay, I've got my business upcoming expenses the next 12 months taken care of. I've got my emergency fund taken care of. There's still $50,000 left in my business account. I'm going to pull that out. And then it's a big financial planning decision. You and your spouse, whatever, can decide, how do we want to use these funds to better our financial position? Do we want to buy an investment property, or let's max out my retirement account this year? Just go ahead and take care of that. We need X amount of dollars for quarterly estimated tax payments. We want to give some and bless somebody with this amount of money, or let's put it in our personal bucket 2 brokerage account and invest it because we want to upgrade our home in 3 years. Different stuff like that. But if you can create some sort of consistent income on a monthly basis that you can live off of, it'll help create this massive question in your financial, walk of cash flow throughout the year of, I just don't even know how to spend money. I don't know how to save money. That's never anything consistent. I think all human beings are built off some sort of consistency in their life, in their financial life. That's why we have monthly bank account statements, monthly credit card statement. Everything's on a monthly and an annual year because we need some sort of pattern of consistency to base our decisions off, to base our spending off of, savings, etc. So create that for yourself, or have your accountant or your bookkeeping, whoever, create that for yourself to help you. And I think it'll bring a lot of peace of mind as you continue on in your business.
Yeah, I like that because I mean, you might be a one person business, and if you're operating with clear lines like that, where you're essentially just paying yourself a salary, what that allows you to do is say, okay, there's, to your point, there's $50,000 extra dollars in the business account. Is that something I want to use for my personal life? And to your point, bonus yourself out essentially, or is there a way that you could spend that to better the business and expand the business and invest in the business and not necessarily and grow it to maybe increase your income 6 months down the road? And so I think it allows you to, you might be a one person business, but if you're doing that, you could be operating like a business that has 50 employees or 100 employees, even if it's just you.
Yeah, that's a good point.
You kind of mentioned a downfall or a negative of being a gig worker, self-employed can be insurance benefits, or kind of benefits, more traditional benefits that come with being a W-2 employee. Just quick, any thoughts on that, on what people can do if they're in that position?
From a health insurance perspective, it's tough. I mean, you've essentially got to go to the marketplace and buy a plan. That's what's nice about larger plans, is it's so much cheaper on the employee level because you have large employers covering a larger percentage of the cost. However, go to a local health insurance company. We have a local insurance company here in town that I even personally have my health insurance through. You have to go through underwriting. So that's the potential risk, is that it's related, your premiums are going to be related to your health. So that's the rough downside on the health insurance side. I think you could view it as a con on the retirement side of things, but I think it's more of a pro, the options that you have. One of the most common retirement plans that we see for those who are self-employed is what's called a SEP IRA, SEP IRA. And it's roughly 20 to 25% of your net business income that you contribute to, up to 69,000. Is that the max for 2024?
Yeah, for 2024, yeah.
So you can contribute up to that. So once your income hits that $300,000 or $400,000 mark, then after your net income calculates to 69,000, that's the max that you can put in, or up to 20% of your net income. That's a large amount of money that you can put up into your retirement account, and you get to write it off for self-employment tax and ordinary income tax. So it's kind of a double whammy. It's a really good savings tool for those who are self-employed. You also have the option of a solo 401k. We don't see those as much just because they're a little bit more administratively heavy, as opposed to a SEP is extremely easy to set up.
Yeah, I would agree. I think for somebody that's, kind of like a one person business, I think that the SEP IRAs makes a lot of sense. It's very easy to administer, can give you a nice tax deduction, and gives you, I think the best thing about it is it gives you freedom of investments, and that you can invest in individual stocks, mutual funds, ETFs, really anything that's publicly traded, you can hold inside of it. So that's a nice benefit as well.
Yeah, that's right. That's some of the biggest items I wanted to highlight is, recommendations for automating your savings and your income, as well as setting up a retirement account. So you have your SEP IRA, as well as a solo 401k if it's just yourself that you can set up. But I think for the most part, it's a benefit to be a business owner, to be self-employed, make your own schedule, but it's also you're on your own for generating the revenue. But a lot of people end up liking the flexibility that comes with being a business owner. So,
yep. And I think what I would add is I think it's very important. We've referenced maybe a couple, key people that you should have on your team if you are self-employed, but I think it's important to have a good planning team around you. You should have a good CPA or tax person that's going to help you with that side of things, because, that is one of the benefits. Is there's a lot of, again, we're not tax advisors or accountants, but we know not to be dangerous, and there is a lot of deductions that you can take as a business owner to help with income, especially if you're a high income self-employed person. So there's a lot of things you can do there, even outside of the retirement planning kind of that we briefly discussed there. I think having a good bookkeeper just to keep things on track, some sort of financial planner like us just to bounce ideas off of and get money working for you outside of the business. And then depending on what type of industry you're in, you should have a good attorney as well, especially if you're in some sort of space where there's contracts or more legal heavy work that you need, so that you're protecting yourself from being sued. And also, I would add, making sure that if you're self-employed, your company's set up properly. Maybe it makes sense to have an LLC or a S corp or a C corp. A lot of different ways you can set things up, and depending on how you're set up, what kind of business you're in, or the space that you're in, there's advantages to all of them. And so I think just making sure you're working with a good team of advisors on your side to help you make sure that everything's set up properly and you're maximizing your business to its fullest capacity.
Yeah. Even deeper than that, on the personal side of that, with the small business, estate planning is extremely important with these entities. Even if you're solo, if you have any sort of substantial business with any sort of meaningful revenue, get an operating agreement, something that states, if you have an LLC, what happens to that if you're incapacitated or if you pass away? Where does that entity go to, the value of it? Operating agreements, no matter how big or small an entity is, are extremely important. Use a great business attorney to help you with that. Highly recommend it. But yeah, have a financial planning team, an accountant, and an attorney on your team. If you have a small business, all extremely valuable points.
Yeah, and something else that just came to mind too was, as you're growing, seeking advice, because from deductions or retirement plans available to you, options change from when you're a one-person business to when you're a 2, 3, 4, 5 and beyond person business. Things change. Retirement plans available to you change, or maybe make sense or don't make sense. And so just making sure that once you have everything set up, it's something that you're reviewing as the business grows to make sure that you're still in line with IRS, business laws, etc.
That's right. That's right.
Thanks. Yeah. Thanks for joining us on this episode of Retire While You Work. Hopefully discuss some valuable topics here for people who are self-employed or just who are interested on this topic. I think there's can be a lot of nuance to being self-employed, but again, there's a lot of advantages and some disadvantages. But to Carson's point a little earlier, I think much more advantages to come that come with being a business owner. So thanks for joining us this week on Retire While You Work, and we look forward to seeing you in the future.
See you next week.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.